Welcome back. I'm Peter St. Onge. This is a weekly roundup of my daily videos on the economy and freedom, where I cut through the BS and lay out what the gaslighting clowns pulled out of their hats this week and what is coming next. Job openings just jumped a massive 731,000 in a single month. That's the highest number ever outside COVID reopening. Separately, job creation jumped to an 18-month high last month. How close are we to HVAC installers going door-to-door with tranquilizer darts to capture workers? Last week, the Bureau of Labor Statistics released their so-called JOLTS report, job openings and labor turnover. Openings were up a blockbuster 731,000 on the month, bringing the total to 7.6 million jobs standing around with their handout looking dumb. Now, 7.6 million is the highest since COVID, when millions of workers ditched work for a couch full of stimmy checks and fraudulent PPP loans, day drinking while their boss had to get up at 5 a.m. to cover their lazy ass. Also, fun fact, 7.6 million means there are now more job openings than unemployed people. Now, it's not just openings. Last week, ADP said companies added 122,000 workers on the month. That's twice population growth. And on Friday, BLS payrolls came in at a blistering 172,000, blowing away projections. Now, this is all very disappointing since AI was supposed to wipe out all the jobs. We were promised cat food. Instead, here we are with more jobs than workers. Interestingly, the job openings was a 9 sigma beat to Wall Street consensus. 9 sigma means it's like winning the Powerball 3 times in a row. In other words, Wall Street economists were way off. The reason why, aside from consistently underestimating the Trump boom, is an epic 670,000 jump in business services. Now, that's interesting because that was supposed to be ground zero for AI. Because personal services need humans, so ChatGPT cannot cut your hair, mix an espresso martini, walk the dog. You really don't want it watching the kids. But business services were supposed to get wiped out when ChatGPT gives it up for free. Instead, business services is growing twice their share of jobs. This raises the possibility that AI is not wiping out jobs, it is increasing jobs. Last week I mentioned a Gallup survey finding companies deploying AI increase hires compared to companies that do not. This might sound counterintuitive, but the reason is something called the Jevons paradox. When something gets cheap, you use more of it. You can cut the cost of a marketing campaign by 90%, you do a lot more marketing campaigns. If you cut customer service 90%, you're now reaching out to customers before they get angry. It's 90% cheaper to run a clinical trial. You try to invent more medicines. I mentioned recently how software engineering jobs, also supposedly ground zero for AI, are actually growing because software production has gone parabolic. To get a sense, commits on GitHub, which is a proxy for how much software is being created, is up 14x in the past year, compared to the pre-AI trend growing 20% a year, 65 times slower. So yes, AI is replacing marketers, customer service, coders, and Jevons means a lot of this ends in more jobs. So what's next? 2026 has been a year of asteroids bouncing off an economy that just keeps going. The Iran war, $100 oil, AI job Armageddon that may be turning into a job creator. There's storm clouds, of course, the biggest being oil prices may not crush the economy, but they send the Fed into panic hikes that crush any economy. That's what hit stocks on Friday, and we could see more of that. The SpaceX IPO is coming. Will it go to the moon or to Mars? SpaceX's eagerly awaited IPO is scheduled for this coming Friday in what will be the largest IPO in history, 3 times larger than the current leader, Saudi Arabia's state-owned oil company. Would make SpaceX worth $1.8 trillion, which is the 10th biggest company in the world, just ahead of Facebook. Now, unlike most IPOs where insiders cash out some of their shares, SpaceX is doing all new shares at $135 each. And Elon is retaining 42% ownership, but 85% voting control. Meaning if you're buying SpaceX, you are hiring Elon. So SpaceX is made of 3 parts. the space launches, the Starlink global satellite business, and AI since SpaceX merged with X, which owns Grok. There's speculation SpaceX could also buy Tesla. Odds on prediction market call share running 54% for an acquisition within the year. That would make the third biggest company in the world behind NVIDIA and Apple. Breaking it down, most of SpaceX revenue is Starlink, about $11 billion. Space launches are another $4 billion. X and Grok are $3 billion. In terms of profit, Starlink is also carrying the show with $7 billion operating profit. Two-thirds of revenue as profits is very impressive, and users are doubling every year, including deals for in-flight high-speed internet with 40 airlines, including United's entire fleet. The space business is also growing fast. Falcon launches are doubling every 2 years, but revenue is rising slow, and space is not profitable because most launches are internal for Starlink. Finally, XAI, Grok, it's actually losing about $3 billion a year because, like all AI, it is furiously building data centers. Put it together, and you're paying $1.8 trillion for a business that's got $18 billion in revenue and is losing money. That's 100 times revenue, 3 times ChatGPT's price to sales, it's 4 times NVIDIA's, 7 times Tesla's, and that's where Elon comes in, because Elon is the most transformational innovator since Thomas Edison. Steve Jobs didn't invent squat and turned a little computer maker into $3 trillion. Elon Musk makes science fiction reality. He catches rockets with chopsticks. He made electric vehicles work after a century of failure by the world's brightest minds, including Edison. He literally founded modern AI. ChatGPT was Elon's creation before Scam Altman stole it. And then there's what's next. Elon's floated a Starlink phone so you can replace T-Mobile, a trillion-dollar business worldwide. AI data centers in space, where the sun always shines, also a trillion-dollar business. Rockets that go New York to Tokyo in an hour at the cost of today's business class, another trillion-dollar business. There's orbital high-end manufacturing, even space mining. A single asteroid, Psyche 16, contains quadrillions, thousands of trillions, worth of platinum and other metals, even allowing for price collapse, more supply, lower price. That's still yet more trillions for SpaceX. And finally, turning Mars into an ANCAP utopia, the biggest real estate deal ever. So as next, on conventional metrics, SpaceX is very expensive. But it's a bet on Elon, the only man ever to have built $2 trillion companies, 3 if you count OpenAI. Historically, IPOs pop at the start, then drop when the fast money moves on and insider lockups expire. So don't invest the kids' college fund on day one, but SpaceX could dominate multiple trillion-dollar industries. A word from our sponsor. If you own gold, and many of you do, you already understand how it protects your wealth from the insanity coming out of Washington. The inflation, the recessions, the wars. But with monetary metals, there's a way to actually earn a yield of up to 4% on your gold paid in more ounces of gold. You retain ownership of real, allocated physical gold with no storage costs while your ounces grow every month outside the banking system. If you're serious about protecting your future and building your legacy, head to monetarymetals.com/Peter to get started. One of the best ways to secure your Bitcoin is with a hardware wallet, a physical device that lets you keep your coins offline without internet connection. One of the most trusted names in hardware wallets is CoinKite, maker of the famous block clock. CoinKite devices are made in Canada. They're run by passionate Bitcoiners who've been at this since 2012, back when Bitcoiners were trading in person at swap meets. You can pick up hardware wallets and plenty of other goodies at coinkite.com/Prof. St. Ange. That's COINKITE.com/Prof. St. Ange. Okay, back to our show. Canada is headed for another recession, and their globalist prime minister is blaming immigrants. Not the millions of third worlders who flooded in to gut wages and drive home prices to Hong Kong levels. No, the immigrants liberals were using to wallpaper their rotting economy that underperformed Japan for almost a generation now. 2 weeks ago, Statistics Canada announced Canada is in a recession, a technical recession, making it the third recession in 11 years since Liberal Justin Trudeau took office. Now, that's one every 3.5 years. For perspective, America has had a single recession in 17 years. and that was COVID. Now, hilariously, Canada's globalist-in-chief Mark Carney is blaming immigrants, namely that he reduced migration to the already bloated pre-COVID level. In other words, he's admitting that pretty much all of Canada's growth was artificially boosted by counting migrant costs and welfare as GDP, a statistical illusion that still failed to boost growth past Japan. So before Trudeau in 2015, Canada was taking in 250,000 migrants a year. That's about 2 million a year in U.S. population terms. By COVID, Trudeau had doubled that past 400,000 a year. That's 4 million in U.S. terms. And then he took it vertical to over 1 million migrants per year in U.S. terms, equivalent to 9 million per year. Joe Biden, eat your heart out. Now, keep in mind, these are legal immigrants. Who knows how many illegals? Now, 1 million a year in a country 1/8 the size of the U.S. obviously is not sustainable. It takes time to learn Punjabi. The natives were getting restless, so Carney returned to Trudeau's bloated 400,000, the 600 gap being his excuse for recession. Now, remember that 400 is still high, considering regular Canadians are growing at 34,000 per year, as in 92% of Canadians are being replaced, just not 96% like Trudeau. So if it's not migrants, why is Canada's economy so bad? Easy, the Liberals destroyed the business environment while crushing regular Canadians with taxes, red tape, and sky-high house prices. The past 10 years, business investment collapsed by a third, with more than $1 trillion flowing out, big in Canada, a period when U.S. business investment nearly doubled, up nearly $2 trillion per year. Meanwhile, a recent Bank of Canada study found nearly half of the most productive Canadians, the top 10%, are fleeing to the U.S., to the point a Canadian is now 59 times more likely to live in the U.S. than in America in Canada. What's driving them is a recent study by Stats Canada that found there are 1.2 million Canadians competing for just 350,000 jobs. For college grads, it's 500,000 Canadians competing for 80,000 jobs. Meanwhile, the U.S. is creating jobs faster than we can count them, with more job openings than unemployed people. So what's next? Carney could easily fix Canada. It is swimming in oil and gas, wheat and hydro with a tiny population. By all rights, Canada should be Saudi Arabia, where nobody pays any taxes. Previous conservative governments kept red tape and bureaucracy under control to the point Canada was almost as rich as the U.S. When Trudeau took over, today it is poorer than West Virginia. Instead, Carney's creating more red tape, especially on energy, which is why Alberta is voting on independence in October. He's hiking spending with the economy shrinking, doubling deficits, hiring more parasitic bureaucrats, and doubling down on censorship. Eventually, Canadian voters rebel. The question is, by the time they get there, will they be voting in Punjabi? China just turned in, quote, shockingly bad economic numbers. Has Donald Trump killed the Chinese miracle? Last week, China reported some of the slowest growth in decades, with investment collapsing, retail sales the slowest since COVID, and industrial production slowing sharply. Exports slowed, car sales crashed 15%. The results were worse than every economist in Bloomberg's survey predicted. And note, these are official statistics. Every China watcher assumes reality is always worse than Beijing admits. Every time I say China's got problems, I get a chorus of China boosters complaining. By the way, there's a name for these in Chinese, Zigangwu Volunteer 50-Cent Army, as in they promote the government without needing to get paid. So for the 50-Cent Army, I freely admit China has an impressive business environment with much less BS and red tape. Chinese companies don't have to pay for gender transitions. They're free to use coal. They don't get sued for $80 million for hot coffee. They're better at infrastructure, especially compared to California. The streets are safe, crime's low. China's education system puts us to shame. Having said, it is not all sunshine and puppies in the Middle Kingdom. Huge swaths of the Chinese economy are centrally planned, starting with 400,000 communist-style state-owned enterprises, actually 900,000 including part-owned, which employ 50 to 60 million people. That's roughly half the labor force of America. Even worse is the trillions China dumps into so-called industrial policy, choosing industries and businesses to give free money when Chinese bureaucrats, like bureaucrats everywhere, have no idea what they're doing. This has led to tremendous overcapacity in two specific areas, housing and manufacturing, which together make up half of the Chinese economy. Both are now going through epic purges with tens of millions of empty houses being liquidated, the famous ghost cities, taking down dozens of massive developers, just one of which was liquidated with $300 billion in debt. For perspective, that's half of Lehman Brothers, which set off the 2008 crisis, and that was just one developer. It's even worse in manufacturing, where decades of cheap government loans overbuilt everything in China. To give a sense, pre-COVID, China had 500 electric car makers. Almost 400 have gone bust, leaving 129, of which just 4 are profitable. Now, normally all this gets purged by a recession, but in China's case, Beijing just keeps dumping fresh stimulus, kicking the can trillion by trillion. But with Chinese debt now approaching 300% of GDP, it's actually higher than America, China is out of runway. Enter Trump's tariffs, which hit 1/5 of China's manufacturing exports, cutting sales by $100 billion a year. Rough, if almost everybody was already losing money. China responded by dumping to the rest of the world, Europe, Latin America, Africa, Southeast Asia. Bloomberg recently reported brand new Chinese jeans going for $1 in Jakarta. Shipping alone's got to be most of that. The dumping is already getting massive blowback. Europe, India, Brazil, and Mexico have all proposed new tariffs on Chinese exports. Even Canada, which has otherwise been suspiciously friendly to China. So as to Beijing took the Japanese central planning model and put an extra zero on it. Japan turned it into lost decades despite smart people and smart companies. China could go even harder. A word from our sponsor. Stocks and even gold are all over the place. If you're ready to diversify, Abundant Minds makes Bitcoin mining simple, transparent, and human. You can deduct every penny thanks to Trump's big, beautiful bill. It's a 401k for Bitcoin mining. Founded by husband-wife team Bo and Christine Marie Turner after losing $500,000 to broken promises in the mining industry, Abundant Minds was built to protect investors. You own the machines, and they make it turnkey with hosting in their facilities in Oregon. Pricing is clear with one flat monthly fee and no surprises, and they guarantee uptime so you keep earning day in, day out. If you want easy diversification without pressure, learn more at abundantminds.com/Peter to get some of your first Bitcoin mine for free as a gift to my audience. The biggest risk in Bitcoin isn't volatility, it is custody. Because Bitcoin removes the safety net, there is no bank to call, no reset button if something goes wrong. The reality is, most people are not properly set up. They hold Bitcoin but rely on exchanges, incomplete wallet setups, and have no real plan for privacy or inheritance. This is exactly what the Bitcoin way solves. They help you move from exposure to actual ownership, self-custody done right, privacy, inheritance, even running your own node, all set up with you step by step. They never touch your Bitcoin. They're your support team. Go to thebitcoinway.com/Peter to book a free call and go from where you are today to a much stronger setup. Now back to our show. Will the Federal Reserve finally kill the Trump boom? All year, asteroids have been bouncing off this economy. First, it was tariffs that Paul Krugman promised would crush the economy. Then the biggest shooting war in 20 years, $100 oil, and an AI jobs apocalypse that was supposed to turn our labor market into a DoorDash circle jerk. Yet growth and jobs just keep going. The Atlanta Fed's GDP now says we're at a robust 3% growth. Jobs are coming in double expectations, with job openings soaring the second biggest on record. But there is a very dark cloud, the Federal Reserve. Last week, the Wall Street Journal ran some Fed doom porn warning of a, quote, collision between the Fed, the bond market, and Donald Trump, driven by oil prices and booming jobs that bring inflation. We've already got rebellion brewing, with Fed members calling for preemptive hikes, while markets went from expecting 3 cuts this year to expecting rate hikes as early as 6 months. Which matters because every point of Fed hike is worth about 1 million jobs. Which matters if you're one of those million and happen to vote. So the background is the Fed is a licensed counterfeiter bribed into existence by Wall Street in 1913. The counterfeiting proceeds go mainly to borrowers who get cheap loans from artificially low interest rates in case you wonder why Americans don't save money, with, of course, a fat cut for Wall Street. So it's a permanent siphon from savers to Wall Street and deadbeats. The key is the swindle's got to be subtle. When you're stealing gas from the neighbors, you got to take a gallon here, a gallon there, start draining tanks, and the gig is up. For the Fed, that means keep price inflation around 2%. Not because of science, but because experience says at 2% voters don't grab pitchforks to tell Congress to fix the Fed. They definitely grab pitchforks at 10%. The problem is since the Iran war, oil has driven inflation to 9.3% annualized right on the edge of pitchforkery. Meanwhile, jobs are booming on top of that, which is great for 340 million Americans, but terrible for the Fed. Since jobs imply loans, Wall Street prints those loans out of thin air thanks to the Fed, and inflation goes up even more. In short, oil and jobs turn the Fed's 2% siphon into a double-digit flood. So as an expert, I warned about this when the war started, that oil will not crash the economy, but a Fed panic will. Because historically, oil shocks only deliver recession when the economy is already limping, like in the 1970s when the oil embargo came right after the Nixon shock. But before this crisis, we were at 4% growth, and 3 months in, we are still at a perky 3%. The war ends tomorrow, inflation drops, Kevin Warsh gets back to finding excuses to cut rates and goose jobs. He's already said he thinks AI will be an epic deflation. But if the war keeps going, Warsh is down to two options. Either purge the Fed's balance sheet, selling the $7 trillion of bonds they bought with past money printing. That cancels the dollars, it lowers inflation, but it is also not happening, with prediction market Kalshi predicting an increase in Fed holdings, leaving the path of least resistance. If the war keeps going, hike rates till you gobble enough jobs that prices crash and Americans are back to cat food. Thanks for tuning in. Remember to subscribe so you don't miss an episode, and go to petersanons.com for daily videos and in-depth articles with charts and all the gory details. Okay, we'll be watching. See you next time.